Hello, YouTube. Is the S&P setting up yet another trap? And I say that because we are now right at our daily downtrend and our weekly downtrend, which is going to be the area the bears will want to defend. But with the momentum, with the bulls and getting two consecutive daily closes over our 50 DMA, is this enough for the bears to squeeze us higher? That's what we want to try to answer today. And if you wouldn't mind, as we're getting started, it would be a big favor to me if you could please smash that thumbs up. And we still have about 1 day left on our sale. If you want to join us and trade with me, Justin from YouTube, click on the link in the description or in the top comment where you can do exactly that, trade with me. All right, so now that we have two daily closes over the 200 DMA, very similar to what we did the last time we had a CPI, what I want to talk about today is what would typically happen when we have a big price discovery higher. Well, we have some very clear examples because there are 4 times ever since our October low where it appears like the third time's the charm because Jerome Powell gave us a wink. So the last 4 times we have templates, which means we can actually go back and look and see what they're doing. And then we're going to talk about what should be happening. And with that said, let's look at one more thing, which was the data, because I think that the bulls punched it yesterday. Maybe Jerome even knew there was going to be this positive PCE number, which means red. Bad data is good data. And that came through this morning when we had let me just go back here. When we had the PCE coming in at 0.2% this morning. Is the same thing going to happen tomorrow? We have non-farm payroll coming in at 8:30 again. And we also have the employment rate coming in at 3.7. So if this number comes in red, well, that should be more juice for the bulls to push us higher, which would be the trap for the bears. Continue to squeeze it, or maybe are we going to focus on maybe starting to retrace lower starting tomorrow? What's really interesting as well is that this week when we got the ADP non-farm payroll, it was 127,000. That would be the perfect bull catalyst to get us over 410. Why? Why not? Let's squeeze these bears. So for tomorrow, is the ADP forecast still terribly accurate, which means it's not going to come in strong? Or is this time different and we're going to see the non-farm payroll come in around 100, maybe 120,000 jobs added tomorrow? That's what we're going to do. So now let's try to take a step back here and remind ourselves that there's also gaps in the chart. And when we zoom out, again, this is like resistance, which has been building up ever since our all-time high. We can look at it here on the weekly with a different perspective, and it shows that we've actually penetrated or violated this downtrend. Let me actually go back here and adjust it now, because I don't know if we did. No, we haven't. So as I go from wick to wick to wick, make sure it's actually touching now. We are here. We are at resistance. We are at the relative low going back to February, 410.64. Today they slammed it at exactly 410 when we got that PMI number coming out. So right on the 10 o'clock hour, they pumped it up to exactly 410, and there was an iceberg there to meet them, which means there's all these orders above that are going to slam the price down. That's an iceberg. And as we're right here at a key relative low, our downtrend going back to all-time highs, and the third time being pretty good. Next week, if we can just get above about 413, that's a bull break. And now we're going to be above the 50 daily. So we're going to be above all these moving averages. Let's remind ourselves what those are. On the daily, we're above both the 200 and the 50. It's the black line and the blue line. Now let's look at the weekly. Cool. That's the last one, right? There's the 200. There's the 50. It'll curl down to probably 411 next week. So maybe 1% higher. There we go. We're above both. And on the monthly, we just bounced off the 50. Yep. And the 200's all the way down here. So that would mean we're going to be above basically the daily, the weekly, the monthly. And as a reminder, we've not had 3. If we go back green tomorrow, we've not had 3 green months going back to February of 2021, which was a pretty nice move higher. So let's look and see what happens. If the third time's the charm, let's see the continuation. Let's see the momentum, and then we'll confirm it. All right, so going back here to the daily chart, what's so important to remind ourselves of is that as we go off our low, actually, let's talk about the gaps here first. So from where we are right now, the gap to the upside is up here at about 420, 122. So that's going to be the gap we're looking for here. We got to a high of 420. So it's only about a $1 gap. I wouldn't really call that a meaningful gap. There's also going to be very tough resistance here. That's why it's a red line, because there's going to be a head and shoulders pattern. And then that's pretty much it. We fill that gap, and that's where a new bull market is birthed above 417. That's where we could go higher. And we're right around resistance here. So if we keep chugging up there, that kind of means we're looking for more. If we remember what we talked about for the 2008 versus 2022 template, well, there's like maybe 1 or 2 more weeks left as we go into the FOMC meeting on December 14th in about 2 weeks, and then it's downtime. But maybe we can squeeze higher for 2 more weeks, marginal or incremental higher highs. On the downside, we have a gap down here to about 381, which basically goes back to our June gap as well. So we're really battling for these June areas here, going all the way back to our June low and our local high, which forms that head and shoulders here. So let's see what happens. And the gap size is about 12 points to the upside, roughly about 12 points to enter that gap. And then to the downside, we're looking at about 22 points. So let's look and see what happens. We're on resistance. Price generally precedes, volume generally precedes price. And the green volume has been building. And that's why we're getting those pop flags. So now let's delete all the lines in the chart and just try to understand what's actually going on here. So last big green bar, right? Pop, we get a reversal on the next day. What's so interesting when we get a big price movement is what happens on the first true test lower. And going back to here, we digest it, low, higher, low. We flag out, hold the relative high. Cool. What happens on the next one? We continue higher for about another week. And then where do we retrace back to? Well, basically the high. So previous resistance becomes support. That's correct. Same thing on the last time too. Next big price discovery higher, pop, continuation, back test, and hold the previous top. There we go. So 3 for 3. What was resistance became support. That is correct. That's what we should expect to see happening. So if now that's the same thing, why'd they punch it all the way to 407, basically into this gap zone here? It's halfway between 405 and 410. It's over the 200 DMA, and that's the area where we want to see the same thing happen. I don't really want to see us spend too much time below 407. Why? Well, on our first back test, we now got a test of our 200 DMA, and it held. We violated 405. Boom, dip buyers came in, they bought it up. So as long as we hold this pattern, I don't see a reason why we can't just go sideways for a bit, right? It's the bears who are paying for this rally, so make them pay a little bit longer, maybe 2 more weeks, and then maybe on the FOMC decision day on the 14th, maybe then they'll get their salvation. But it's okay to be wrong. It's not okay to stay wrong, as we talked about yesterday. All right, let's look at one more chart here. Let's look at QQQ. And the reason why this one matters is because, well, it's not as high as the S&P right now. So it is not above its 200 DMA. It is not even at, it's not even filled its June gap yet. We got to get to 300. So we got to get above 300 to fill that gap. We got to get above 305 to get over the 200 DMA. And basically right now, the S&P is battling for this neckline here on the head and shoulders. That's what it's battling for. There's a lot more room for tech to go higher. So that's what I would expect to see. When I look here at the volume as well, it's not as dominant. So there is green bars, like, don't get me wrong, but they're not like punching. And that's really what I want to see. Right now, if it's a trap, the NASDAQ is telling us that. It technically closed green today, so it's still leading the SP 500. But the caveat here is just that it's got a very clear resistance level here. And if it can clear it, it's probably going to go to the 200 DMA. And same thing here. We want to make sure we hold yesterday's high, which means basically being above 393 and continuing to have green days, just incremental gains, pushing it higher. That's what we want to see. All right. I think one more chart for us to look at is going to be DXY. And we'll talk about VIX too, because it's actually back below 20 now. So looking here at the dollar, well, there was a chance for it to re-enter the demand pocket here, or sorry, the pocket, supply pocket. It did not. Supply was found at the bottom range, and now it's got one daily close below the 200 DMA. Will we get a second? And if we do, that's the opposite of the S&P, where we're now getting downside momentum, peak dollar, blah, blah, blah. And that should cause stocks to go higher even more. There was a 1% decline on the dollar today, but the market is basically flat. So if you look here to a weekly chart now, let's see whether or not there's actually some arbitrage. So right now, the S&P is up by 1.2 on the week. DXY is down by 1.28. So what this means is that yesterday's move happened more suddenly on the S&P, and now the dollar is tracking what the S&P should be doing. So down by 1.2. it should be the exact opposite on the S&P. Here we're up by 1.26. Boom, like that math stuff is working. Now let's look here at QQQ. All right, 2.37%. That's not so bad. So if the Nasdaq is pushing ahead and the dollar is basically what's driving the market higher, let's make sure we pay really close attention. It just cracked 105. That's like a big round number. So let's look and see how much downside momentum there is. Let's try to get back below our 50 DMA, 50 weekly, sorry, at about 103.68. And then we also want to look at the VIX because it is now back below 20, which was one of the key things I was watching for. So if we're going to get an actionable bottom or a bottom that's going to provide us a really big oversold bounce, we have to pretty much be between 40. We have to be like over 45. It happened every previous time. So the third time's the charm, and we don't need that true actionable bottom. The VIX is probably going to keep going lower, below 20. They can spend a lot of time below 20. Spends a lot of time below 20 in periods of no volatility. I still think that there's going to be a bout of volatility, but as of right now, the market's voting and people don't really need insurance. So below 20 is a big, significant area. Remaining below 20 for an extended period just means the market's telling us something. Let's make sure we can understand it. Other things to look at are, I think on the weekend we talked about, here we go. Actually, I have the article up handy right here. So this was really interesting because what's been leading this market in terms of the global, it's been China. China banks are now valued like 2008. Whoa. So what's been happening to FXI or the Chinese index? Oh my goodness. It's booming, baby. It's up 9.5% this week. That's right. And off the bottom, it's now up by about 37%. That's like a huge move. It also took out its relative low and it's looking pretty good here, right? Took out the relative low at about $26. So it looks like it wants to go boomtowns, baby. It's got a lot of upside to go. Volume's not yet overly enthusiastic, but it's building up. And then also Bitcoin. Why? Well, SBF or whatever his name is was talking yesterday. And I think that if people were worried about contagion, well, they pretty much got rattled. So this is either delayed or maybe we're doing the same thing we did last time on Bitcoin, going back to 2020, basically. And this is where if we're going to test our primary uptrend and invalidate it, violate it, which means we spend time below the green line, we have to get back above it. We have to reclaim 20K and we got to start trending higher. Why? Because last time we were bouncing off the 200. This time we're not. This time the 200's all the way up here at 24,000. Our long-term price on the 200 weekly is like almost it's 8,000 points higher or 7,000 points higher. That's a lot. So we better start pumping, baby, because everything tracked so far. 3 climaxes in volume, 1, 2, 3. And then we got the reclaim of the uptrend, but this time we're not on the 200 DMA. So like we cannot really afford to stall out. And if China and Bitcoin and the riskiest assets are going higher, let's make sure we pay attention because that euphoria or greed can feed through to U.S. markets. And then we can get into extreme greed. When now people are feeling like, oh my God, if I didn't buy now, I better make sure I do now. So if you feel like you missed the move or if you're bearish, maybe now you're going to start revenge trading bullish. That's where traps are set. So I really encourage you to tune in tomorrow where me, Justin, is going to walk you through for the final hour. And we're going to talk about the trap, exactly what to do. You can tune in for that live tomorrow for free. Or if you are interested in joining us, we have about just over a day left. Tomorrow at midnight Pacific time, we're going to have our sale end. And that is for up to 50% off at thealgo.com. And that is if you want to come trade with me, Justin from YouTube. So again, one more time, we look forward to seeing you tomorrow for our public stream. And if not, please go to our public website. We would love to greet you inside of our community. We wish you all the best of luck tomorrow. And as always, please mind your risk and please be prepared to be wrong. Thanks so much.